Okay, so now we've got Scott Close from EMX, I believe. No? Once again, I'm given different information.
Sorry about that.
That's okay. But another royalty company, but royalty generation, royalty acquisition, you're actually cash flowing, you make strategic investments, so you've got a lot of fingers in a lot of pots here.
Yeah, and not enough time to talk about it. Well, welcome everyone. My name is Isabel Belger, and I'm running the Investor Relations program in Europe for EMX Royalty. I apologize about my voice. I hope that you can still hear me. My first question is, who of you doesn't understand German in order to decide if I do the presentation in German or in English? Who doesn't understand German? Please raise your hand. Oh, wow, yeah, okay, then it is in English, right? Okay, no worries. And I would also like to add the apologies that Dave Cole, the CEO, is not here today. I hope you're not too disappointed that I'm stepping in for him. Also, on a side note, we have these wonderful USB cards with lots of information on it, not just the presentation, but also our asset handbook, our royalty handbook, our financial statements, press releases. So if you're interested in that, please raise a hand after the presentation and I come to you and hand it out to you. Also, I'm also available for questions outside later on. And another question for you. So who is a shareholder at this moment in EMX? Okay, also lots of potential in the room. So I want to focus for a while on the business model, since that's very different to how many of our peers approach the business. I want to explain that, and then I want to go into some updates for those who are a little bit familiar with EMX, and just touching the highlights. As I said, it's not so much time to go into everything. So what distinguishes us from others is the royalty generation, as Graham already mentioned shortly. So what is that? So we started 20 years ago as a prospect generator. We have actually our 20 years anniversary this week of being publicly traded. And so we started out as a prospect generator, having geologists all around the world staking new claims and adding their geological knowledge to it. We collect data, we do some inexpensive work, meaning also doing some geophysics, but we rarely drill the programs. And when we can show the prospectiveness of these assets, then we sell them off to a new partner. That can be a big company like Rio Tinto. We have done repeated deals with Rio Tinto, Newmont, South 32, but also a lot of times with small companies. We like both deals. They're a little bit different. The majors, they have more cash, so usually we sell the project for cash. Then there are always milestone payments, incorporated state gauge payments, so we make sure that there are certain thresholds hit, so we make sure that there's work done on the projects, otherwise they go back to us, and we can collect pennies and dimes throughout the way to production. But the most important part of the entire process is to actually create a royalty, a production royalty at the end, and this is a very inexpensive way to do that. When we do deals with smaller companies, they tend to have not as much cash. They like to pay us in shares. So we can also win when they are having an exploration success. Having geologists all around the world gives us the advantage of being on the ground naturally, but also coming across royalties that have not been going through a sales process in the market, and that's how we in the past also picked up royalties very inexpensively. So we try to integrate the royalty generation part with the royalty acquisition. We have also bought some royalty portfolios in the last 2 years in a classic bidding process. But as you might have heard also from Alexandra before, this is a very competitive space, and there are some companies out there who are willing to just pay way more than what we think the royalty is worth. They're basically buying cash flow for the future, and you can only hope for that they will ever get the money that they invested back. So we are very value-driven, and we won't do that, and we are not in a spot where we have to rush to the next deal, because our bread and butter is the royalty generation. We are really, really good at it. We have done it for 20 years, and just flipping to, oh yeah, there we are. So this is to make it, more visible. We have sold within the last 5 years. We created throughout this process 89 royalties, and that's way more than all of our competitors basically combined could do. Yeah. So coming back to our global asset portfolio, you can see where our focus is. It's mainly in the Western US, but also in Fennoscandia. We are at this point the largest mineral rights holder in the country of Norway. We are the second largest in Sweden. We also hold a couple of projects in Finland. One of our first entities were in Turkey and in Serbia. That was because our CEO, Dave Cole, his first job was 18 years with Newmont Mining, working there as an exploration manager in Turkey. So when he left, he was very aware about the potential in Turkey, and that's how we came about to our first units there, so we have 2 producing assets, mines in Turkey at this moment, where we'll go a little bit more in detail in a minute. We also are exposed in Peru, Argentina, and Chile, where we also have a producing royalty in Chile. So, and here just, we have a geographic diversification. You can see how the cash inflow that we have right now is split. It's mainly copper and gold at the moment. We really like gold, but we also think that the economy is driven by copper. Everything that we produce now, like in the battery space and everything, has a huge copper amount in it. So we love copper. Our portfolio is split 58% to the state that they are sold. So we hold a royalty, and we have 42% of the projects are still available, and we market them. The number stayed roughly the same throughout the last year, so we all the time add new projects and sell them. So that's and here we highlight a little bit one of our main investors, Franco-Nevada. We are very proud of them. They invested in us 1.5 years ago. They paid a premium, 25% above market at a time. They have never invested in another royalty company, and we are very proud of that they did with us. We have another deal with them in place, so we feel very honored that we can actually openly say that they think the integration of the royalty generation business model and also acquiring royalties, they find that very powerful, and that's something that they can do. Yeah, Newmont has been a very early investor. SSR Mining became an investor through a purchase of a royalty portfolio. Sprott has been with us for a long time. Rick Rule, who's not with Sprott anymore, has been a very early supporter. He actually gave seed capital when we started the company. And just to highlight also a few of our partners that we work with, it's as I mentioned before, names like Rio Tinto and Newmont, South 32, and the operators of our 6 producing royalties at the moment is Zijin, the Chinese who are running the Timok mine in Serbia. Lundin Mining is the operator in the Caserones mine in Chile. Lydia is in Turkey. It's a private operator. Nevada is the joint venture of Barrick and Newmont. We have a royalty in Nevada called Leeville. Asan is also a Turkish private company, and McEwen Mining. Having said already a little bit about our about our top shareholders, so management also has some skin in the game with 12%. Paul Stevens is also a very long supporter. He is a huge fan of our business model. So just to wrap this together, so we can actually call with friends of Paul Stevens and also accounts from Spot that we cannot put here. We can call 75% of our shareholders with a few phone calls. What I also like to highlight here shortly is the share structure. We are, as I said, in our 20th year now. I think it shows something to have this kind of share structure after that time. We always try to make the most value for our shareholders. So having this little dilution as possible. We have 21 million cash right now, 44.7 million as debt that is owed to Sprott and due in December next year. We are planning to pay down a part of the debt and refinance, and we are talking with senior banks at the moment about that. The working capital means that this is mostly shares that we own in other companies. So since we don't have so much time left, I want to come to the most important part, I guess, of a royalty, like what kind of cash flow do we have? So this year we expect a total of cash flow of between 30 and 35 million USD. And I should probably also go a little bit into more detail about TMOC, because Dave has been speaking a lot about TMOC, and that has affected also our stock performance quite a bit. Some of you might know that we were in a disagreement with Zijing Mining. That was a royalty that we bought a long time ago for $200,000. The royalty agreement was not written by us. We bought it. It was not in very much detail written, so there was a room for interpretation. We said we would go to arbitration. The Zijing said, no, let's sit down and settle this amicably. We did. We basically met in the middle. That was the easy part of it, to just negotiate the royalty. There were other aspects that also needed to be negotiated, for instance, like visiting rights and audit rights and rights for documents, stuff like that. And with the translation between languages, the Serbian government involved, I don't want to bore you with the details, but it just took a very long time. And to be precise, it took 16 months, and the market got at some point very impatient and kind of punished us. So we were very happy. We knew, we were never skeptical that it will happen, but we were, of course, also stressed about that it took so long. So we had the announcement in September that it is settled. We also got right away the money that Zijing owed us since they started to produce. So that was 6.7 million. And now this is going to be paid on a quarterly basis going forward, paying around 4 to 4.5 million a year. And this is only for the upper zone. As you might know, this is the biggest discovery in Europe, biggest copper discovery in Europe, and there is a upper zone and a huge porphyry lower zone, and we have the royalty on both, and now they're only producing from the upper zone. So I see that my time is
Minute and a half.
Minute and a half. I don't know how much I can cover here. I think you see the numbers. I think I want to highlight that the golden bars, they are the NAV that H.C. Wainwright came out with. We are in some regards not allowed. We don't necessarily agree or disagree with all of the numbers, but we are not allowed to talk about a few of these things, or that we can put out these numbers. We think they are pretty conservative. And as I said, 30 to 35 million in cash flow this year. And just to show you quickly for the last years, our development, and the last bar you see is for the 9 month, only 9 months in 2023. You see how, sorry. Ending on a high note. You see the development. Even if we would just stop working right now and do nothing anymore, we would have that kind of cash flow and just going forward doing new deals, doing more royalty generation, looking also at accretive royalty purchases. And I didn't even mention our strategic investment. I just remember that. So I'm sorry about that.
It's okay. You can always book a meeting to find out more.
Exactly. Any questions? Sure. Yeah?
Are you planning more private placements?
Not at this price level. But if the market turns and we see opportunities to invest somewhere, yeah, we would certainly think about it.
Okay.
Okay.
Yeah, we're out of time now, so thanks a lot.
Thank you.